Hi, and welcome to the Stock Scores Market Minutes for August 29th, 2016. This week's topic, missed trades. Is it a question of process or judgment? You should review your process on a regular basis to find all of the trades that met your rules. So if you're a day trader, at the end of each day, review the market action and see what trades should you have taken based on your strategy. Swing traders should do that weekly. Position traders do that monthly. Through that analysis, what trades did you find and which trades did you miss? And then analyze why you missed them. Do you remember looking at those stocks and simply passing on them, thinking that they didn't meet your rules? Or did you not even see them? If you didn't see them, then it's a question of process. If you did see them but passed on them, then it's a question of judgment. Make changes to your process and your judgment to correct the problems so that you find the valid trades that meet your strategy rules. All right, let's get into this week's analysis. We had a little bit of selling pressure toward the end of the week as the market looked ahead to the speech by Janet Yellen at the Jackson Hole conference. You can see the market's reaction on Friday went down as the tone was somewhat hawkish. When I say hawkish, I mean there was some inclination that there would be a raise of interest rates as the numbers are getting better. But you can see that basically through the week we went down. Now in the grand scheme of things, we're still stuck in this sideways trading range that the market has been in all summer. However, we have broken this little upward trend line. We did make a little falling top. So there's some early signs that the sellers are starting to find some motivation. I don't think it's a strong sense yet, but I do get a little concerned about the strong volume on Friday as the market sold off to the downside. So something to watch for. Now, longer term chart, we have rising bottoms on the chart and the trend is still intact. So it's still a bullish chart. Very short term, we've got that little break there, but until we break this trend line, I don't think we should be too worried. Again, the momentum is up. No reason to run for the hills, but there is some reason short term to be cautious. On the small cap stocks, we have rising bottoms on the chart. We've got basically an upward sloping channel, no signs of weakness there yet. So I don't think any reason to be real nervous with the small cap stocks yet. But of course, if the larger cap stocks do sell off, probably going to drag these ones down as well. On the Canadian market, we also saw weakness this week. And, again, over the summer, we've been sideways. It's not really a breakdown of any sort, but it is something to be concerned about. Now, moving on to the longer term, we have that upward sloping channel. No break of the channel. We've got rising bottoms there. No break. So the bulls are still intact. We've only got 1 week of a little bit of weakness. So not a reason to be bearish yet, but everything starts with a little bit of weakness. So that could grow into something bigger. Now we do have something a little bit more concern on the TSX Venture. We've basically just gone parabolic, pulled back to the trend line. That's not a trend line break yet. We actually bounced off of the trend line on Friday. But if we were to roll over, make a falling top, and roll over and break that trend line, then we're going to see some money start to come out of this sector of the market, which has been red hot this year. So again, early stage caution, nothing to be too worried about yet. On the Treasury bond side, we've got now a falling or descending triangle pattern. We're coming close to support where if we break down through support, this probably goes lower. And of course, if Treasuries are going lower, that means that the interest rates are going higher. So you're starting to see the market pricing in a little bit of a sense that interest rates are going higher this year. And that shows up on the US dollar chart. Look at the performance of the US dollar on Friday. A big break of that little downward trend there, holding these rising bottoms. So it does look like the US dollar wants to go higher. Why would the US dollar go higher? Well, if interest rates go up in the US, that means more people want to own US dollars to buy US debt because it pays a higher interest rate. That's why you're seeing that little bit of a shift in the US dollar. And that affects things like gold and oil. You can see that gold closed on its low of the day on Friday. We do have falling tops into that pattern. We now have to see if it breaks through support. I talked last week about this pennant pattern. It's sort of almost breaking that, if not breaking that, and now maybe testing the support there. And if it breaks that, we'd probably move down to the next level of support, which is here and then there. So I would say the risks for gold are a little bit more to the downside, not showing a lot of optimism. If oil is able, or pardon me, if gold is able to rally up through that downward trend line, then we can be less cautious. But for now, I want you to be very cautious with gold and gold stocks. U.S. oil, this is the United States Oil Fund, You can see it's in a little flag pattern here. It tried to break on Friday but failed, and that's probably because of that strength in the US dollar. So short-term trend is still up. It's holding that little trend line. But if we break down through the lows of last week, we may start to move lower and retest that. And I think a lot of that will depend upon what the US dollar does this week. On the fear side, we're starting to get, this is a very short-term chart, by the way, a 30-day, 120-minute chart. So you can see that fear has been going sideways for the last little while, which is actually somewhat bullish. And the reason, of course, is that the VIX decays in value over time. So it has stopped decaying in value like it had been, and now it's stabilizing. And if we start to see this tick to the upside, that could tell us that we are starting to get that sense that there's a correction coming in the market. So this is an important chart to watch. Look at the volume that traded on Friday in the VIX. So you want to keep an eye and see if that breaks to the upside there. All right, finally, and I'm going to do something I haven't done before called Trade of the Week, which I'll talk about in just a moment. But here we have the US stocks bullish in the long term because that trend is still up. I've lowered it to neutral short term because I'm a little worried about that trend line break. Bullish long term on Canadian stocks, bearish short term. I don't like how the trend is sort of rolling over in the short term. Gold, neutral long term, bearish short term. We're seeing that weakness start to pick up. Not a real big signal yet of weakness, but something to watch for. Oil, neutral long term, neutral short term. Hawkish comments from Yellen boosted the US dollar and raised interest rates, something that may negatively impact stocks and commodities. No major breakdowns yet, but caution is warranted. All right, let's talk about the trade of the week. This is a day trade from Friday's trading session. One of my indicators that I use is something called a wave indicator. That's the blue dot. I also use something called a message candle indicator. That's the white dot. I use these, I've developed these indicators myself, and I have TradeStation watch stocks for those that are making these wave and message candle indicators. Anyway, both of those fired on ADMP right there. We had other signals to buy ADMP there and there, but this was probably the best one, a little wave and message candle indicator leading to a pretty good little move over the next following couple hours that topped out at about 7-to-1 reward for risk, finishing the day at 6-to-1 reward for risk. So on a very slow trading session Friday, this one did pretty well. All right, well, that has been the Stock Scores Market Minutes for August 29th, 2016. Have a great week in the market and trade well.